The United States government is all but certain to shut down in just 2 days. And what does all that mean for the entire market? Will the market suffer massive amounts of volatility, or will we see some stabilization? Well, this will all come to light here tomorrow as we will see the government shut down. But let's dive in to what are some of the potential implications, as it seems there is a more likely than not scenario that the government shuts down. Right now, they're setting the odds at 85%. But last time this coincidentally happened, guess who was also the president of the United States? It was Donald Trump. So he's been through this before. So this will be very interesting to see how this plays out this time. But first, let's dive into some of the potential implications, because it'll be the first time that it's shut down since 2018. And this would furlough 750,000 workers per day, costing $400 million in daily compensation. Well, it matters because the last time we entered in a government shutdown was in 2018, and that lasted 35 days, making it the longest government shutdown in history. Now, usually it's just about a week, but during the shutdown, federal functions are suspended. The government deemed essential, such as those related to law enforcement, will continue. But if any agreement isn't reached by tomorrow morning, essentially, 8 hours, 7.5 hours from now, it will enter in a shutdown. So these shutdowns add some drama, but stocks, honestly, don't really react too drastically, which is very interesting to all of this because it rarely derails the market over the long run. 86% of the shutdown saw the S&P 500 end higher 12 months later. So it actually might be a positive signal for the market. Even though everybody will tell you this would mean doom and gloom, this might actually show that, hey, the government, well, we might not need them to be running at full speed in order for the market to be humming along. Now, continuing on from this, we'll say results are consistent regardless of the president, whether it's Republican or Democrat as well. So the near term will bring more volatility, though. And that's where I think everybody will be tuned in, is that, hey, in the short term, we're just going to be a little bit volatile. We're going to see a little bumps in the road. But in the long term, we're going to be all right, folks. We don't have to worry about it too much because the United States is extremely resilient. Now, the S&P 500 tends to finish higher in just 55% of the cases after the shutdown is finished. So that means it's basically a toss-up. Will the market do better or worse? The history shows that we don't really know. It sometimes will, sometimes won't. So with this, the S&P 500 has finished higher in every shutdown since 95, though, including the last one under Donald Trump. So Trump said that they will probably shut down and that the predictions are now at 87 9 hours before. So this was basically an hour before. So the markets are basically projecting that this is going to happen. In fact, the morning government data, the total number of job offerings plummeted 87%. So these job offerings are not just plummeting everywhere in the private sector, they're also plummeting in the public sector as well. Now, on the flip side of things, we are seeing gold skyrocket in flight and absolutely take off as it keeps hitting all-time highs. And I've been covering it on this channel drastically, so you guys know if you're subscribed. If not, I know that 93% of you guys who are watching this are not subscribed, so please help me get to 500. Help me get to 1,000 ASAP like Rocky, because I'm really trying to push and bring some value to you guys. So let me know in the comments what other videos you'd like to see out of me as well, because we're going to be looking at the net short of the VIX positions and how just drastically these have spiked downwards. Now, a VIX spike would result in a widespread short covering, which also could lead to some volatility in the market, as this is the biggest downward shift that we've seen since 2022. And I don't know if you guys remember what happened in that time during 2022, but I believe it was the Bank of Japan just rose interest rates by 25%, and we saw that giant spike in the VIX. So this is obviously a little bit more drastic than just, hey, let's raise by 25 basis points the Bank of Japan. But hey, we're seeing a massive spike in the VIX as well. Now, the US dollar is, like I've been following on this channel, the worst start since 73. Look, we came off the gold standard in 71. So all of this together is greatly worrisome, I guess, in the short term, let's call it. But I think in the long term, we're going to be okay, folks. But let's keep diving into some of the short term that we might see. Because in fact, the US dollar is depreciating so quickly that Apollo says it will spark more inflation. A 10% drop when coincide with a 30 basis point jump in inflation. So the shutdown, all this won't help. Now, whether you blame the left or the right, whatever you might think, either way, we're going to see the House Democrats shut down the government here very quickly. Now, in terms of who stands, 750,000 government employees will all just stop working. But would it affect your investments? That's what everybody wants to know. Am I going to be able to make money, or will I lose money after all of this? Now, as I lined out, the long-term implications of this is you're going to be okay. But in the short term, that's the sketchy part here, right? So am I going to lose money with this, right? So the analyst said that a longer shutdown spanning weeks or months, however, could cloud economic outlook and sour investors. Now, these things work out usually pretty quickly. As you saw, the average is about 8 days. But we could see top congressional leaders meet with Trump and say, hey, you know what? We're not going to come to grips on this. We want to see Donald Trump's market suffer. And so, interestingly enough, we've seen the Dow climb 9% this year and the S&P up 13% and the NASDAQ up 17%. But analysts pointed to a muted response as everybody will be keeping all eyes on the overall market and what we could potentially see here. So with this, right, we're going to be watching very closely just how drastic the market moves are going to be with this, right? Because now everybody's saying in the overall in the government, we want to make sure that we are not relying on the United States government for all of these various activities. I mean, in fact, the SEC is looking to move to allow stock trading to go, quote, on chain. Why? Well, because of things that we're seeing right here. Like if you see the government shut down, you want to make sure that you could still have access to your capital markets and capital in general. And so this shutdown would look for a lot of various volatility that people would want to make some money on. Now, investors are hedging against that by going in on the VIX, as you guys can see here. But this reflects the investors' rush into funds that would profit from this spike. Now, the largest funds tracking the performance would be the short-term futures, and the VIX have seen those that surge literally 312%. I mean, it's absolutely massive that they're basically planning on this volatility to come and just honestly shoot up. But with all of it, right, we've got a very interesting market here in the US debt markets because we've been screaming for essentially, not we, but let's say Donald Trump has been essentially screaming for an interest rate cut with all of this. And this interest rate cut might be essentially a necessity because the US net interest as a percentage of the total government revenue reach is at 13%. For reference, the next highest is at 10%. So that's 3% higher. And the heavily indebted Japan, theirs is only 1%. So you can't use the excuse that, oh, it's because the US is just so heavily in debt that our debt to, ratio here is so high. Well, even though our debt to GDP is at 123%, as we see here on this US debt clock. That will make you nauseous if you keep looking at it too close here, folks. But either way, the federal government has paid a record 1.2 trillion in interest in the past 12 months. So the US government needs to lower rates to avoid increasing of these federal interest payments. Now, will we decrease rates? That's the question. And it's looking like after these numbers are coming out, a 96.7% chance that we will cut interest rates at least 25 basis points with this new data coming out. Now, if you look at inflationary data, the inflationary data is all saying that, hey, we are still within a very inflationary time. And if you guys have been following this channel, you know that I've been tracking this prediction essentially every single day that I've been coming to you guys live. And we've been seeing it trick down to nearly 85%. And now we see it skyrocket up 10% more to see an almost certainty that we're going to cut 25 basis points. And that's all because of what I'm lining out here, a government shutdown with massive amounts of debt just keep on piling up. So let's see, 90% of the government actually shutting down. Will that happen? I don't know. But the government being a net negative might be honestly a positive with this shutdown here, right? And as All Nighter Hider is saying, that we've been off the gold standard for a while. It's just that 1971 was that announcement. Now, with that, right, where are we seeing the dollar and the dollar strength? We're seeing it actually trick on up to 97.8, which is an area, we want to see it close to that 100 mark as much as possible. But I mean, it's going to take some time to get up there, right? I think that over time, we're going to start to see this trick on up as we're seeing other markets around the world do a little bit poor. And we actually might see the first close tomorrow above that 6,700 mark. We're sitting at just around the all-time high. This might be the highest close ever, or just right around it. Yeah, we haven't closed at 67 just yet, but we might get there tomorrow, and we might see an all-time high in the S&P 500. I mean, we've essentially been floating at this all-time high for quite some time. I mean, we're essentially flat here in the past 5 days with about a 1% increase. But I mean, it's all sign of investors just essentially having a lack of confidence in the market. I mean, when you have the dollar having such a poor start to the year, everybody is going to be looking at ways to park their money to not lose purchasing power. And this is the major crisis here, is that we're seeing the purchasing power of our dollar fall dramatically. So we need to keep a close eye on this. And I'm going to be keeping very close track of that. So make sure you guys are smoking that like Cheech and Chong, hitting that subscribe button with the bell notification so you could join All Nighter Hider and McLovin in the chat. And I brought you guys literally a video almost every single day. I missed one day this entire month. So if you guys could hit that subscribe button for me, and I'll be bringing a bunch of videos for you in the month of October, as I'll be following this all very closely.